It's the American dream to own your own home, and government programs work to make the dream come true. The federal government insures mortgage loans to give banks an incentive to lend you the money for that dream home.
The FHA is the most popular type of program that's out there for the first-time home buyer. And for just people in general.
Anybody can apply for FHA. Anybody who has an adjustable rated loan, they can refinance to FHA if they wanted to.
FHA, a part of the Housing and Urban Development Administration, or HUD, tries to boost home ownership. An FHA mortgage is a great deal because it requires only 3.5% down.
If you want to go with 3.5% down, your FICO score has to be a minimum of 580. If it's below 580, then you have to come in with 10% down.
For an FHA down payment, relatives can kick in to help.
It could all be gifted funds from relatives and family members. But it has to be gifted funds. It can't be borrowed monies against a credit card.
FHA has a minimum income requirement.
No more than 31% of a buyer's gross monthly income should go to the payment of the mortgage, and that payment includes principal, interest, taxes, and insurance.
But a group of people can chip in to apply and pay the mortgage.
You can have up to 4 people on an application, but they all have to be contributing to the household.
Bankers like FHA because it helps moderate-income families buy homes.
Over 50% of the mortgages that were granted in this country last year were to people who made total household income of less than $75,000 a year.
FHA insures the mortgages, and that's a bonus for bankers in case you default.
We insure the repayment of that loan to the lender. So number one, the lender has no risk.
The negative with the Federal Housing Administration FHA loan is that the fees are higher. The interest rate is higher, the upfront fees when you're getting it are higher.
While FHA insures the loan in case you default, you actually pay the insurance.
You can have a 2.25% what's called an upfront premium, which is taken and it's actually put on top of the loan amount. So if you borrow $100,000, you got to pay another $2,250 back to the lender over time.
But FHA limits the price of the home you can buy, and that number varies from community to community. To check your area, go to HUD.gov and click on Buy a Home. HUD also encourages you to visit an approved housing counselor to help figure all of this out.
Go to our website, you click on resources, and there's a sublink that says housing counselors.
Veterans can also get a great deal through the Department of Veterans Affairs. The VA also insures mortgages.
You know, that's there for our servicemen and women as in recognition of their service to our country. The program is good for them.
You put no money down and get 100% financing if you meet the requirements.
The interest rates are attractive. And the closing costs are pretty reasonable, less than FHA.
Similarly, in rural communities, the U.S. Department of Agriculture also insures loans. If you and the property qualify, you put no money down, and again, you get 100% financing.
It's a good entry-level mortgage for a first-time home buyer.
State and local governments run grant programs to provide down payment assistance. Sometimes it's as much as $25,000. And some banks offer free money through the First Home Club.
You set up a savings account here at the bank, and for every dollar that you save on a monthly basis, there's a 4-for-1 matching grant up to $7,500.
Banks do this so you'll open accounts and borrow with them. If you save $200 a month or $2,000 over 10 months, you'll get a grant of $7,500 from the bank.
That money is interest-free and is forgivable over a 5-year time frame. If you sell it, if the house in between there, you have to pay a portion of that money back. Only the principal. There's no interest being charged there.